Mortgage rates just hit their lowest point in the past 10 months, and in today's video, I'm going to be breaking out exactly what that means for you if you're buying, selling, or considering refinancing your home. But first, I am a realtor here in Irvine, so if you are looking to buy, rent, sell, or refi, make sure you reach out to me. All my information will be in the description below, but I'll also put my number right here. That way you can easily give me a quick text or call. But now we'll get back into the video. So firstly, let's break down exactly what's happening with interest rates right now. Currently, the 30-year fixed rate is averaging around 6.67%. And in the beginning of the year, and pretty much for most of the year, we were hovering at above and around 7%. So this is a major savings for many buyers right now. 15-year fixed are actually hovering below 6% right now. FHA loans are at around 6.4%, and VA loans at around 6.1%. This dip is mainly tied to softer inflation data than we were expecting, and also an incredibly weak jobs report, and also the jobs report before, the one that happened in June. A lot of people are saying that it was actually more inflated than it should have been, so that's really the biggest factor that's driving rates so drastically down right now. And the Fed is also talking about multiple rate cuts towards the end of the year, and in December there will be a 99% chance of it happening. So we can definitely expect more Fed rate cuts. There is some speculation of up to 4 different ones. However, I highly doubt that, but you never know. Especially with how much Jerome Powell is in the hot seat right now, things could get really weird. Secondly, let's break down exactly what this means for buyers in specific. Let's say you're wanting to buy an $800,000 condo, townhome, or single-family home with 10% down. This is the exact difference in cost that you would be paying now with that 6.67% rate. At 7.25%, you would be paying around $4,900 a month for your mortgage. Now at 6.67, it's going to be closer to $4,600, saving you $300 a month and roughly $3,600 every single year. And remember, for every 0.1% down in interest rates, you get an extra 1% in purchase power. So now with it being roughly 0.2 down in mortgage rates, you have an extra 2% in buying power. So that's going to get you into better neighborhoods, better schools, and at the exact same price that you would have a couple months ago. Or my favorite way to look at it, buy the exact same house you were always going to buy, but now it's going to be even cheaper and you'll be even more comfortable with the payments on that home. And third, this is what it means for sellers. So one of the biggest reasons right now why we have this unaffordability crisis is because so many sellers have below 4% interest rates, even some below 3%. And for them to buy a bigger and better home, they're most likely going to have double the mortgage for a little bit of a better home. So for them to sell, it's not worth it, meaning there's less inventory, meaning that there's less homes to go around, prices are going to go up. So what this means is we're getting slightly closer to where a lot of sellers could be wanting to sell their homes and actually upgrade and have a little bit of a lower payment. So that's going to open up more inventory. And also for sellers, if it's an investment property or you're just trying to get the most bang for your buck on the home, right now, we're going to be seeing an influx of more buyers into the market. And on top of that, depending on the price range where you are at, everyone who is slightly below is now going to be creeping into your market. So your sale is going to have even more competition than it did before. Especially in a market like this where days on market is coming a little bit stronger, and we're also seeing prices slightly lowering in specific areas. This slow down in interest rates is going to really help you in getting your home sold as fast and for as much money as possible. And fourth, this is what it means if you're looking to refinance. So like I was saying before, a lot of people who own a home right now are below 5, 4, even 3% interest rates. So for that crew, it's not going to help too much. But if you bought within the past 1, 2, 3 years, your interest rate could be looking a little bit good right now. Refi demand just went up 23% in 1 week, and it's 55% higher than it was this time last year. So a lot of people are reaping the benefits of these new mortgage interest rates, and it's not just people who are looking to buy. And most of the people who are refinancing right now bought in that 2023, 2024 market where rates were consistently above 7%. So even that 0.5% drop is drastically changing a lot of mortgages right now, especially in consideration with how much equity those people made in the past 2-3 years. And fifth and finally, this is why you shouldn't wait. If you're a buyer, you got to understand that interest rates, we really can't predict. Everything comes up and it's a last minute thing. So if right now these interest rates are allowing you to get comfortably in a home that you like, then you can comfortably afford a home that you like. And waiting for the market to get better is really one of the worst things that you can do. And if you're a seller and right now you like the way that interest rates are at, you like the more demand coming into the market, we don't know what tomorrow holds. So again, if right now you feel like you can get the amount of money that you want for your home, go for it. And last, if you're thinking about refinancing, if this amount of a refinance is going to make you more comfortable in your payments, you're going to be able to do more things with the people you love, do more things with your family, and be able to just have a better quality of life, then we really don't want to risk seeing if we'll get better. Now, this is my job, so I would love for it to get better because then more people would want to buy and my life would be great. But I also want to make sure that I'm realistic and setting realistic expectations. Do I think it's going to get a crazy amount better within the next year? Probably not. Most people, most professionals, even though they're mostly wrong, are guessing maybe low sixes, but I really don't even think that's going to happen. We're probably going to be sitting at around 6.5% for the rest of the year. But again, I don't know. So if what you're seeing right now you're liking, you should definitely act on it. And if you are looking to act on these changes, make sure you reach out to me. Even if it is a refinance or you're just wanting to get a loan estimate, I have some of the best lenders in the entire state, so I'd love to get you connected with them. All you have to do is shoot me a text or email and just say, I want to get a quote, and I'll make sure I get that done for you ASAP. But as always, thank you so much for tuning into this week's video. I release videos just like this every single Friday detailing the benefits of homeownership and how to buy a home, and just talking a little bit about the real estate market. So if you enjoyed this, make sure you subscribe so you don't miss out. But as always, thank you so much for tuning into this week's video. I can't wait to see you in the next one. Talk soon.